Risk tolerance in trading. Now, this comes down to simply how much tolerance do you have when it comes to you placing a trade, when you have live positions, live orders in the market. If you find yourself very uncomfortable, you're not tolerant with the risk that you have in the market. If you are comfortable, then yes, you are very much okay psychologically with the amount you have risk with regards to your open positions or orders that you have ready in the market. Nervous trading is the first point I want to talk about. If you do find yourself where you are nervous with your trades that you've got on in the market, then you know instantly that you have risked too much. Your tolerance is just not there because you're nervous with the positions that you've played. So essentially, this is going to cause you psychologically to be in the completely wrong place. And remember, trading starts off up here. If this isn't all here in collective and you're solid mentally, then you're going to start, problems are going to start occurring. So with regards to nervous trading, as I say, look at cutting back your exposure. Do not over leverage, do not over risk your account. And that just comes on to the next point of money management. With trading, obviously, as it goes by the textbook, you should not be risking any more than sort of 1 to 2%. If you're not risking 1 to 2%, you're risking more than that, then again, that's going to likely trigger where you start to sort of, your tolerance goes out the window. You start to gain a big amount of potential worry when you're trading because you simply just risked too much of your capital. Remember, you shouldn't always be thinking about reward, all about these dollars. You need to be thinking about risk as well, capital preservation. You need to preserve your capital. If there's just simple reward, not thinking about risk, you're not going to have any capital. You're not going to have anything to trade with because you would have potentially blown up your account. So always think about money management as well, risking simply 1 to 2%, and that will keep your tolerance well and truly in check, okay? And the last point, psychological testing. When it comes to trading, a good thing that I think works quite well is, look, you will soon know anyway, very quickly, as I said at the beginning, you will soon know how comfortable you are with certain position sizes that you're trading or how much you're risking of your capital. Now, this is a good thing to do, that, as I say, with the psychological testing. Place a trade of, say for example, 0.5% of your capital. So you're risking 0.5%, walk away from turn your phone off or close your MT4 terminal on your phone or on your computer, your desktop, whatever the case may be, and see how comfortable you are without nervously anticipating and checking, see how your trade's getting on. So just see how comfortable you are. If you're happy with that, take it up a notch then. Again, 0.75 perhaps of your total capital at risk in a trade. If you're comfortable again, then maybe 1%, and keep working your way up to perhaps 2% and just see how you're comfortable. If you get 2%, you're starting to get a little bit nervous and you keep checking your trades anxiously, then scale it back down. Just do what you are comfortable with and what's going to help you make gradual and steady, consistent gains. By keeping in mind, obviously, this is the most important point really, management, capital preservation. And that's simply risk tolerance when it comes to trading.